Well, we've been keeping close tabs on this grain market today, and it's interesting in that we have some divergence between the corn market and the soybean trade. Let's dive in and I'll show you what I'm talking about here. On the corn market right now, we have the most pressure showing up on the nearby contracts. So you have the May contract on the corn now at $3.49 1/4. We have now dipped down below $3.50, and we're trading 5.5 cents lower than where we closed yesterday. We've actually gotten as low as $3.47 3/4 and then bounced off of that by just a little bit. We have December new crop corn down 3 now at $3.64. That's how the corn market is shaping up. Now let's switch to the soybeans. And on the soybean side, you have the May contract 6 3/4 higher at $8.28 and that's 6.5 cents off of its earlier low this morning. And here you have the nearbys with the most strength. Now you have the November contract on the beans 3 higher at $8.47 3/4. Let's see what the wheat market is doing today, shall we? On the Chicago May wheat, we're now 3 3/4 higher at $5.01 3/4, and we have that July contract 3 cents higher right now. And if you look at Kansas City's wheat market, here you have the May contract showing some pretty stout gains, really. We're 7 1/4 higher at $4.31, and July up 6 1/4 at $4.37 1/4. Minneapolis wheat has showed some strength here today, that's for sure. And we currently have that May contract there trading about 7 1/4 cents higher, keeping up with the Kansas City trade. Brian Hoops joins us now. He's with Midwest Market Solutions in Springfield, Missouri. I bet the farmers are kind of chomping at the bit to get in the fields. Are they able to get any field work done in that part of the country?
You know, there's a little bit of activity, Marlon, and good morning, by the way. I hadn't had a chance to tell you that yet. But, yeah, we're seeing a little bit of activity. You know, they're starting to sow a little bit in the ground, do some field work, some prep, and you know, that's happening. Even in parts of Iowa, I noticed on some travels that I had done, there's some anhydrous being applied at this time. So, you know, a lot of this fall tillage work was not able to be done due to some wet conditions, late harvest activity, and producers trying to get a jump on that. If we have some warmer weather, they're out there in the fields trying to get something done.
Have you heard any talk from producers this year as far as talk of switching the acreage based on either the weather conditions, soil conditions, or just the way the market is lined up right now?
You know, at this time, it's probably too early to really make any judgments as far as what producers will do if they switch any commodity to a different one. I think certainly the biggest impact will be weather related. If we have another wet spring or wet conditions, and we're much wetter than what we were a year ago at this time, there's going to be a propensity to move from corn to soybeans. We may see, you know, shift in spring wheat as well as we start to seed that crop, as that market has really fallen off and is near contract lows. So, you know, that we may see some shifting going forward, but, you know, producers right now, I think, are kind of locked in with what they have a plan, and then they'll change that based off of weather conditions going into the real planning time frame in April and May.
Do you think the coronavirus impact will start to kind of fade away from the grain market a little bit as we get closer to that prospective plantings report?
Well, I certainly hope so. You know, I hope we can, you know, put this corona impact behind us. You know, what's really going to affect, you know, crude oil prices plunging, trading below $30 a barrel this morning. You know, part of that is due to the corona effect. We're not shipping as much, we're not driving as much, or we're becoming, you know, more secluded in our homes. Certainly airlines shutting down. All that has a real negative impact on energy prices. Crude oil, as I said, below $30 a barrel this morning. That is not good for ethanol production. A lot of plants starting to idle or shut down because of, you know, they're not very profitable. That hurts our demand for corn, and we see that reflected in our prices here the last several days, is with this energy prices tugging lower. Corn demand is going to suffer, I'm afraid, as our exports are probably going to have to be lowered in subsequent reports by the USDA. They're going to have to lower ethanol demand as well.
All right, Brian, we'll take a look at the livestock trade in just a moment. We're talking with Brian Hoops, and we'll be right back. On the live cattle board today, we had quite a rally this morning. Let's take a look. And on the futures board in Chicago, April live cattle have rung the bell. They're now expanded limit higher, $4.50 higher at $96.35. June up $4.20 at $89.45. You get a little less to the upside as you go further out. On the feeder cattle market right now, let's go ahead and flip over there where we have the April contract up $5.75 at $113.85. May up $5.18 at $115.15. On the lean hog market right now, we currently have the April contract expanded limit higher, $4.50 higher. So is May, $4.50 higher at $62.70. And if you go way out there, even the August contract is now $4.50 higher. So big rebounds in the livestock trade here today, Brian. Is this going to last? Is this a sign of a potential bottom, or do you want to wait?
Well, I think we've bottomed the cattle. It's really going to be hard to tell because it's going to be volatile and really choppy. But you look at the spreads, and that's one thing that'll bottom before anything else does. And they've shown a bottom for about a week now. June contract has started to gain against the August and the October when we were breaking hard in January, February, and early March. It was a lot of bear spreading. Now we're seeing bull spreads starting to take place. That's a very good sign. And you look at the box beef clearance yesterday, a huge load count for a Tuesday. And then you look at, we jumped $16 by yesterday's closing cutouts. That's the biggest ever in one single day. The biggest previously was about a $4 jump. So packer margins are really going to improve here as they buy cattle a little bit cheaper. And I think the trade is looking at this June futures coming into today at $85, cash trading at $110. That suggests a $25 discount to the current cash markets. And with these boxes improving, demand really improving, very unlikely we're going to see the cash fall that much lower. And June, I think, is just too heavily discounted in this environment.
Brian, good to visit with you. Thank you. I appreciate that. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, where he is the president. And Janet, one more thing that may be propping up the livestock trade. The Dow now, after being lower, is 513 higher.
Can't predict it at all, can we?
Very jumpy.
Very jumpy. Thank you very much, Marlon.